Hey everybody, I just got a question on TikTok asking me if I ever sell a stock out of boredom. And the answer is yes, and I did it yesterday. And I'm going to show you what it was and why I did it. But first, I want to talk about what the company is. You can see it, it's right over there, it's 3M. I think a lot of people tend to think, oh, you're a stock trader, you're probably trading penny stocks and garbage companies that no one's ever heard of. And for the most part, that's true. But you can also swing trade. You probably can't day trade these large cap stocks, at least not often, right? It's not often where the stock is going to have such a humongous run that you can profit off of, say 25 shares, because that's likely what you're going to be buying in a company like this. You're not going to be buying 100 shares or 1,000 shares or 2,000 shares. You're going to be buying what you can afford, which might not be much, which means in the one day rally, if this stock would have to have an unbelievable rally for you to be profitable. That's why swing trading large cap stocks is much preferred. It's also much preferred because these are more secure, stable, solid companies. They're not high risk pump and dump garbage penny stocks, which means if the stock pulls back or if it just consolidates at a lower price, maybe not within your range where you consider selling, but just kind of trades flat for a while, no big deal. It's a good, solid company, and you're okay to hold it for an extended period of time. There's less risk, less volatility than, say, some $2 penny stock that got pumped up on social media. Because when that stock ends its rally, that's pretty much it, right? It's just going to hang out in penny stock territory for a very long time. These large cap companies are a different story. They're a different breed. So if you were to swing trade it and get stuck in a period of consolidation or sideways trading, as long as you didn't need the money, you could just hold it. Now, some people say like a swing trade is anywhere from a couple days to a couple weeks, maybe a month. Make it work for you, man. If you end up swing trading this thing for 2 or 3 or 4 months, some people might say, well, that's no longer a swing trade. Who cares what they have to say? You make it work for you. Let me pull this up a little bit. So I wanted to explain why I bought and why I sold. So first thing we're going to do is we're going to jump back about 3 months to show you where I bought it in the short term. So I bought it on 2/19, which is right around here. Now, if you were to look on this particular day, there's nothing really right here that makes it a worthwhile trade, right? We're in the middle of the relative strength. We're not overbought. We're not oversold. It's just kind of hanging out, doing its thing around here. There's no real reason to have purchased this stock here. So the question that I got is, do you ever sell a stock out of boredom? And the answer is yes. But sometimes I buy a stock out of boredom. I was bored. This looked potentially interesting right here. Potentially. There was no real anything here. I just snagged it on 2/19. Now I'm gonna go back and I'm gonna explain why the stock was on my radar in the first place. So let's jump back to the 180-day chart, and then I'm going to show you something that you may or may not have known on this 120-day chart. So we're going to go back to 219, and then we're just going to go back a little further, and we're just going to click and drag, and boom, it's going to bring you the whole chart. It's going to zoom in on whatever piece that you select. So 219 is right here. Another thing is, once you have zoomed in, if you just scroll to the left, you can go back a little bit further. I don't know if you knew that as well. So let's go back a little bit further because I want to show you what happens right here and why the stock was on my radar. We see that it has this massive rally. This is when I first made note of this stock. It must have popped up on one of my screeners. I must have seen it on one of those Investors Business Daily posts, like the stocks that had big runs that day, and maybe that's where I saw it. I don't really remember. But it was 177 and it shoots up to 186. So pretty significant one-day run. This is when I started paying attention, waiting to see what was going to happen. And we see that it sells off over the course of the next several days, and it gets kind of close to this 200-day moving average, which I've talked about before. These are called dynamic support and resistance lines. In other words, they're not a straight flat line connecting the points, the low points or the high points where it's a straight line. It's dynamic. It moves as the stock price moves. These Bollinger Bands are a prime example. It's not a flat line. They're all over the map, man. And same with the 200-day moving average. It just averages out. Now, what I noticed was after we had this big run up, it kind of gets close to this support line. We use 200-day as a kind of support line. Kind of gets close, kind of hovers on it, not really, but close, and then it pushes higher, and then it sells off. And again, it starts getting close. Now, where's 219? So here we are. This is around 212. I notice again that we're heading into using this as a support line. So like I said, I was bored. There's no real reason to have bought it when I did. If I was, and I think, sometimes we see a lot of traders, they get like too minute with the details. I bought it like they're like with the thing in their eye and they're soldering something and they're very precise and whatever, and that's fine. You can be precise if you want. I've been trading for 11 years, so sometimes I'm not as precise as, maybe a new trader who's trying to really dial in and get exactly pinpointing the right time to buy. I looked at it and I said, you know what? If this stock can continue to hang on this 200-day moving average, I think it could potentially have room to grow. One of the reasons is when these Bollinger Bands narrow, it indicates to me that a breakout could be coming. And it could be a breakout to the upside or to the downside. Nobody knows. But when you see this, these very wide, the Bollinger Bands are very far apart, they're stretched, they're wide. This makes me nervous, especially when we're at the top, because it indicates that there's a lot of potential downside, right? If we're all the way up here, overextended on a big rally, overbought, the indicator to me is, look how far apart these Bollinger Bands are. And we're at the top. It's less likely to me that we break out and continue going higher, and it's more likely to me that we start to reverse and pull back and maybe head down to some sort of dynamic support or a flat, you can connect this with like using a trend line and making an actual support line, which you can do. And I could do right in here in real time. Say it's like this day right here. I can go here and I can draw a support line and say, all right, I'm going to keep this on my radar now. And as it happens, look, it hangs out around these same different price points. Oops. Oh, man. I'm going to have to zoom back in again. So I'm going to get rid of this line now. So the reason that I bought was basically because I was a little bored and because I thought, hey, if it can continue to hang on this trend line and the Bollinger Bands have narrowed, right? They're considerably narrowed, which indicates a breakout could be happening one way or the other. I'm going to see what happens. And of course, we have our contingency plan to exit. Now, I want to talk about this too. Your contingency plan to exit a large cap or blue chip stock, something like 3M, an established company, is a little bit different than your exit strategies on these really high risk, very extremely volatile, kind of sometimes maybe garbage penny stocks. On those, their swings can be so unpredictable that you really want to get out of these stocks if it starts to go south, because who knows what happens next. With a stock like 3M, it's a little bit more secure, it's a little bit safer. You can have a little bit more breed. Like if you get stuck holding a stock like 3M, it's not the worst thing in the world, unless you have limited funds. And if you have limited funds and you need to be making other trades, then of course you get out at whatever price point you're comfortable with. For me, on a stock like this, it would be closer to the 7 to 10% range instead of the 3 to 5% range, which I would use on a very volatile penny stock. So I had the math. I had it written down somewhere, but I cannot find it anymore. Oh, yeah, okay, here it is. So I'm in at 178. 219 is right here. 219 is right here, and I was in at 178. If the stock dropped around 7%, it would drop to 165, which would be somewhere around here, and my loss would be $140. I'm okay with that. Also, I put in around $4,500 on this trade, about 25 shares. If I had limited funds and I was much more more frequently trading $5 stocks, I would have purchased 1,000 shares of a $5 stock. And if that stock had gone up 30 cents in 3 or 4 or 5 days, I could have made $300 in a much faster time period. So that's why I usually prefer more affordable stocks where I can buy 1,000 shares. With a stock like this, I have to buy a small amount of shares and depend on a very big price increase to make it worth my time, and that can take time. This isn't a 2 or 3 day trade where it can go up 30 cents and I can make $300. This is something that's going to have to go potentially weeks. So I'm tying up my funds. So now if we go back to the 180-day chart, which would be, I'm already on it. Okay, so unzooming. I want to show you two more things, which is how to draw trend lines that aren't like what we've seen. So what you've seen me do before is I've been using these, right? Where you connect all the low points and you have a straight flat line. But we don't want to do that. What we want to do today is we want to draw a trend line connecting all the lows. So we have one here, we have one here, and we have one here, and then we just continue it all the way out, making sure it touches those lows, and we drop it. This is our support line. And you notice every time it hits here, every time it hits here, every time it hits here, it has a rally back up. But you're noticing that I bought the stock somewhere, I was right on it perfectly. I bought it right here. I bought it in the middle. And that's because, like Inception, we have a pattern within a pattern. So this is my support line. But again, if we zoom in, this 200-day becomes the support line. So there's a variety of different methods that we have here. So one example is if you were a more casual swing trader who, made a couple swing trades here and there, this is what you'd be looking for. And frankly, you'd be waiting potentially quite a while. And you might not even get there anymore, right? We might have entered a new trading range that has yet to be established, right? This might be a thing of the past right now, getting it all the way down here, because look where we are. 199, so 200, it would have to drop all the way to 175. It would have to be a $25, roughly, $25 drop in price, which I don't have the percentage, but we can get it. So if we were to come on here and we would say, okay, so it's 199, and it's going to drop to 175. That is a 12% drop in the stock price. So the question is, do we think the stock will have a 12% drop? Probably not, right? So my guess is this support line no longer is going to come into play, and eventually maybe the stock will level out somewhere else and we'll draw a new support line. The last thing is, of course, we would draw a resistance line on top, connecting all the highs, connecting the highs. So we have 3 highs right here. We draw it all the way out. And so basically what we see is, much like when we were in here looking at this one with the huge run-up, we're at the top of this trading range, right? 199, 205. And look at the potential downside. We're at the tippy top. What is the likelihood that this stock breaks through and pushes and surges even higher? I'm thinking probably not. It's too wide apart. Now, if it was in reverse, so like the opposite pattern where the support and resistance lines were narrowing together over time and the price was consolidating and bouncing in a lower trading range. So basically, if you took this and flipped it around, now, if this was reversed, we would be kind of intrigued because the bands are decreasing, they're narrowing, the stock is bouncing between a tighter range, indicating a breakout is much more likely. Flip side, it looks a little less likely. So if we were to zoom back in again, we're getting close, we're at the top pretty much. But again, looking in right in here, there's no real reason to sell. I mean, you could look at this and go, okay, it's overbought right here. But the point to this one was, I got bored. I sold because I got bored. When I picked it up here at 219, right here at 178, this stock had a pretty big run. Turns out I was right. It held on support, consolidated in price, and then it had multiple breakouts. Breakout, 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 multiple breakouts to the upside. But then it starts to kind of consolidate a little bit over the last, I don't know, let's say 10 days. It starts kind of just trading a little bit sideways. And I was getting bored. I was looking at this going, look, I was up $490, but around here was probably closer to 400. And it would bounce in between 400 and 450, 400 and 450 in terms of my profit. And I was thinking, We're not really going anywhere. I'm tying up $4,400. I've been in the stock for almost 2 months, and it's not going one way or the other. But what I also notice is that we're pretty close to the top of the resistance line. So I'm out. I got bored. I could have held, and maybe it would have pushed a little bit higher over the next couple of weeks or months. But again, $4,400 that I've tied up that I can no longer trade with. And if I know that I can make more money buying with that same $4,500 on a cheaper stock, a $5 stock, that can have a smaller run, 30 cents, and I can make, let's go and look and just see what the percentage would be. If I buy it at 5 and I sell it at 5.30, it's a 6% increase, but I can get that 6% increase. So I was up 10%. I was up 10% on this stock, but it took me almost 2 months. If I can make 6% much more frequently with that same $4,500, I would rather do that. So to answer your question, I got bored, and that's when I bought, and I got bored, and that's when I sold. There wasn't really a concise reason for me to sell right here, right? We didn't hit any of my triggers. We didn't hit any of my support lines. We didn't get overbought. I mean, kind of a little bit over here, but not really, especially when you consider how overbought we were up here on a huge rally. I got bored. That's why I sold. So I hope that answers your question. I hope it kind of also gives you a little transparency here when all these traders come out and they like to overcomplicate it and they have to have an exacting reason and it has to be this, it has to be. Sometimes you just buy it because you're bored and it looks like it could be potentially setting up as a good run, and we also have our way to protect ourselves. So if we were wrong on our hunch, not the worst thing in the world. I get out at around 7% and I walk and I get back the majority of my money, right? Put 100% in, walk out with 93%. And my loss is only around $140 if I had lost on this trade. I didn't. It went up. I made $490, so a little more than I had hoped. Right? I was getting kind of itchy and like thinking I should sell it somewhere around here on like April 4th, 5th, 6th when it was trading sideways, and I ended up getting out a little bit more than I thought. And if we were to jump in on today's chart, it's actually even lower than what I sold it at. Right? I sold it at 198. I sold it at 198. It's 197 today. Not that big of a difference. But with these large cap stocks, that's how it be. So if you thought this video was helpful, if you learned something, please hit that bell. Please hit that subscribe. Thanks for watching and have a good day.